The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks. Well, we are started down. We've actually bounced a little bit today, which is good. We were hitting some major support today, and whether this is going to hold or not, we'll have to wait and see, but I'll share some of these charts with you. The first one that I wanted to mention was the VIX index. As you can see, we went up to that 20 level. Again, we were not able to close above it. The market actually rallied back a little bit yesterday, but in the aftermarket, it went down, and we made newer lows in the NASDAQ, and we made newer lows in the S&P, but we would not make newer lows in the New York Stock Exchange Index, which is the most important one of all, and I'll share that chart with you after we're done here talking with the VIX. The thing that you might want to mention here, and this is the thing that is interesting when you're in the Tiger trading room here, is they give you some really great information. And the decliners were 2-to-1 over advancers today. And believe me, folks, you're not going to get a big move down if it's just 2-to-1. You need 4-to-1 or greater. Usually around 9-to-1 will start it down. Then you'll know that there's going to be something more significant. But when you see it 2-to-1, that's really not a panic type thing, especially when you make slightly lower lows in the S&P and in the NASDAQ, and then with no follow-through. The main market, the New York Stock Exchange Index, is the one that I follow the most because that's the broadest average of the high capitalization stocks. And what I'd like to do now is to share that index with you just so you can get an idea. And I put this in the newsletter well over 2 weeks ago, and so far it's happened. Once in a while you got to get lucky doing this, and today was the day. Well, so far it was lucky. Anyway, we'll take a look at it. You'll see that the chart going back to October, what we're doing is we're making a 61% retracement of the low that we made back in October. Then we went up and we made the 3 drive to a top pattern that happened on the new moon of December 31st. We had a new moon on January 31st, but that didn't mean much. It was a high, and then we've come down and we've hit the 61% retracement twice. We hit it Monday, and then we also hit it again today. But what's interesting is today we've already reversed almost all of yesterday's downward action, and if we can get it up another 50 or 60 points in the New York Stock Exchange Index, we're going to have a outside day to the upside, which would mean we'd be looking at a some rally coming in. So this is the reason why I watch the New York Stock Exchange Index, because it's a pure index, folks. They can't play any games with the futures people, where someone has a little bit of a margin call or something like that. And we will see some margin calls because we discussed the debt problem that we have with margin debt and credit balances. We discussed that on Monday, and that's the thing that is going to be the proverbial kiss of death of this puppy when it finally does get ready to roll over. If we're really fortunate here, and I hate to use the word hope because that's a terrible trading word, is if we're really fortunate here and we can get a nice rally that could last somewhere between 5 and 7 days, taking us out into maybe next week, maybe somewhere between the 11th and 15th of February, then we would really have something for a very, very low risk shorting opportunity again, much like we had, back on in early January. But right now, to sell the weakness here is almost sudden death, because these markets can rally quickly for absolutely no reason at all. But this New York Stock Exchange Index is certainly hitting where it should be. Now, if we go below the lows, that we made today, then that would really be a very negative scenario, and we're probably not going to have much more of a rally. But right now it's acting like it really wants to do that. And the other thing that's helping us to tell us that there's a possibility that the rally is coming is the bond market. The flight to quality ended 2 days ago in the bond market, and it's come off 2 full basis points, and that's telling you that there was no flight to quality this morning. The bonds were getting hammered just like everybody else. The only market that was really going crazy was the gold market. It jumped up quite a bit, and it gave back quite a bit of its gains already. So we still have a chance here to hold this level, and it's been mentioned here in the Tiger Room that we did hit the 200-day moving average, and I know a lot of the folks on Wall Street watched that, and it did hold, and it happened to be right at a 61% retracement. And at the same time, we were just about at this place where we were looking to find a low in the Bradley, which the Bradley model is not perfect, folks, but when it's working, it works incredibly well. And right now, it seems to be pretty good. But it's supposed to have a little bounce here, and that would take us up into around the 20th of February, if that would be the case. And so we'll wait and see. So I wouldn't want to be too bearish in here because we've been down for 3 weeks. We have the volatility index has reached its objective on the shorter term one. We don't have any panic in the bond market. We certainly don't have any panic in the volatility index, because if there was panic in the volatility index, it would be 22, not at 19. So these are things that I'm assuming that we could be getting ready, to have a little bit of a bounce here. But like I mentioned here, but if we go below these lows that we made here today and we don't hold, we could literally, melt down here. And when you see a meltdown coming, what you want to watch for is just unrelentless selling, and watch the advanced decline line. You'll see the number of declining issues exceeding the declining issues by 9 to 1 or greater, and the volume will be something like 8 or 9 times on the downside, and then you'll know that there's something amiss in Camelot, and it's getting ready to go a lot lower. But right now, it's held early morning, but remember, this is still early in the morning. But there is a potential here because of all the other things that are occurring that we might be able to hold this level. The other thing that I was mentioning yesterday was the fact that the Japanese market did not break down. It had a little bit of a rally, and the yen also went down. The yen dollar also went down and matched that same low that we had just recently, and that told me at least that there was no panic coming from at least from Japan, and that gave us an idea that we could possibly be looking at a market that was going to hold at least for a short term. I will put this up here to let you see what I was looking at. It's a 60-minute chart of the yen over the last few days, and you'll see that we've gone down here several times, and we've made the 1.618 expansion and tested it 3 times, not going below it. And that's from a standpoint of looking at other markets. This is telling you that there was nothing panic happening in Japan at that time. And because when these things panic, let me tell you, well, you already know this, but they all fall together because we're in the same basket, folks. When we cough here in the United States, the rest of the world gets pneumonia. So remember that, when you're trading. And this is why this margin debt is so incredibly important. I'm going to bring this up one more time because it is that important for us to take a look at. And I think that it's worth everything because a lot of people haven't seen it before. They might have missed the show. I don't know how, but they could have. Anyway, but this is the margin debt that comes from staywealth.com, and it shows that we're at record highs. We're even higher than we were in 1929, and that means people have been borrowing money like crazy. Their credit balances are low. So the slightest move down in the market puts them, and believe me, a 6% drop in the market does not put them on margin call. A lot of these people still have, a lot of big profits. They might have bought Apple at 400 and Google at 700 and stuff like that, but not many people are in Apple and Google because of the high price of the stock. Those are mostly hedge funds, in my opinion, that are actually doing that. So keep in mind that it has held up so far, and it looks like is a possibility that we might be able to hold this level and at least have some type of a rally, going back a little bit higher, maybe for 4 or 5 more days. Remember, we're down 3 weeks, so if actually we topped on December 31st. So we're down 5 weeks. So we're down 5 weeks. We could get a rally of anywhere from 1 to 3 weeks. And if it's just a minor rally, and we'll be able to follow it each day, and we'll be able to see, where the things are that are coming into the market, and whether there's going to be some support or coming in. But I don't believe the news will have much of an effect. As you know now, you're seeing a lot of news come across. It's not nearly as good as it used to be. The other statistics that I think that you should check for yourself, and the fact is that over 55% of all the stocks on the New York Stock Exchange Index are in a downtrend. That means they're below the 200-day moving average. But even more important than that, the downtrend is that they have lower tops and lower bottoms, and that means you're in a downtrend. We've had some, big moves in a lot of different things across the world. They're always talking about the emerging markets, and people are saying that the emerging markets are a good buy. And as a matter of fact, I can't disagree with that. But they have shown something to me that I think is really important, and in fact, it's more important than most people want to give it credit for, is that we had a wonderful Gartley forming on the emerging markets just about 5 days ago. And as you can see, if you go into Tiger TV, we shattered that a few days ago. We bounced a little bit today. So it is very, very oversold. This could be one of those situations where we could get another rally that would equal like we had with the BC swing, and then we're getting ready to go down lower. Folks, the way this market came off in January is very, very ominous. I don't want to be a bearer of bad news, but you don't have to be a rocket scientist to figure out that this stuff looks like it wants to go, a whole lot lower. We've got the Dow's only down 6.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and one of the things that I was watching today, because of the market, going up early and then coming down and, falling hard, I always watch for, that event that, might cause a crash. And one of the things that I look for is I watch the action in the Treasury bond market, and I've posted into Tiger TV the 30-minute chart on the 30-year bond over the last couple of weeks. And as you can see, we made that big drive to a top pattern the other day when we had our 325-point move down in the Dow. And since that time, the bonds have sold off just about 2 full points. And as if you'll notice that this morning that it was just making a 382 retracement of the high that we made back on Monday up at the 134.16 level, and then it dropped a full point. But what's happening now also deserves our interest, because if we go and look at it just a little closer, you're going to see that we're going to be almost at a 61% retracement in another 7 or 8 pips. So you've got to make sure that if the market starts to fade again and these bonds start to rally from this 61% retracement, that means that money could start moving back into to bonds and leaving stocks, on a shorter term basis. And that's one of the things that makes these things jump around quite a bit. So keep in mind that that's what it's looking at. It looks like what it's looking at right about now, but we still are a little ways away from that 61% retracement in the Treasury bond. The main thing that you got to remember here, folks, is we're starting to see increased volatility, which we expected. This is one of the things that, Basil has been watching this volatility index. I've been watching this volatility index, and I think that other people are probably watching it too. And you could probably look at, the other, some of the other markets around the world to see that they're getting very, very volatile too. All you have to do is turn on the TV, and you can see that there's been pretty much of a bloodbath, all across the globe. I've had a request here to bring up the Bradley stock market model, and I will certainly do that here. I had it here just a second, but it always hides from me. But it can't get away. It can hide, but it can't get away. So just give me a second, and I'll have it up here, and we'll take a look at it. It gives us a pretty good idea of where we are here in the market. There we go. We'll just get this up here, and we'll talk about it, of course, before the break, and then we'll move on to some other things. As you can see on this, that we came down really hard. On Monday, the Dow Jones has still held that level of 15,350 or so, which is right in the ballpark what that Basil was watching, and we're trading right there right now. And if we can hold our own here and have a little bit of a rally, people will come in and think that this was the next great buying opportunity, and hey, they might be right. They might be right, because it is different this time, but I think it's different this time in a way that they don't want to listen to, but we'll see. Anyway, the Bradley model is due sometime this week, either today or tomorrow, and we should get a rally into early the following week. That'll come in somewhere around, let me see, today's the 5th, so sometime around 10 days, so you take 4 days off for the weekend, so 5 more trading days, we would get 5 or 6 more trading days. That gives us Thursday, Friday, Monday, Tuesday, Wednesday, Thursday, so next Thursday is the day we probably want to be looking to see what the rally is going to do. But at any time that we fail and go below 15,300 in the Dow, boy, it's going to get nastier and nastier. We come down really hard, folks, and the problem is that we came down really hard from the patterns that that I've been screaming about since November, and that is these huge 5-point reverse waves that have occurred. I mean, these have just been tremendous on the downside, and that tells you that when they start this way, that means the horse is out of the gate. And since this is the year of the horse in the Chinese New Year, maybe that's the right type of terminology to use here. But to me, it looks incredibly bearish long term. So we got the Dow is only down 1 on the day now, which is good. Let's keep rooting. Maybe we can get it up on the day before it's over.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we're back, and I wanted to change direction here for just a few seconds here. We talk about volatility, folks, and I want to show you some volatility. I don't I don't trade this, but it was brought to my attention by Rich Anderson because he has people that trade this. But I'm going to post a chart for natural gas. It's a 3-minute chart, so it's just going to show today's action. But when you take a chance and get a chance to look at this, you're going to see the swing up from early in the morning around 6 o'clock New York time till 9 o'clock. That 3 hours. It moved $5,000 in value. It went from $525 to $575, and then in the next 2 hours it went from $575 down to $515. That is a total of $7,000. So today natural gas futures have moved $12,500 in one day. Now, if you want to figure out what that would be in the S&P, it would be 150 points, I believe, and no more than that, it'd be 250 points. So if you want a 250 point move in the S&P each day, go over and start trading natural gas, because it's going to give you all of the excitement that you could possibly ask for in a market. It really does move around, and I know part of it is related to this weather that we have here, but not that many people that I know use natural gas for heating, but it's a very, very wild market. What's interesting about it is when you watch it trade, it's all 1 and 2 lots. There's no 100 lots in there. There's no 50 lots in there. None of that is present. It's all 1 and 2 lots. So when it moves, it really moves a great deal. So that's the most volatile thing being traded right now. And when you look at crude oil is like watching molasses trade compared to that. Tomorrow on the commodity show, it's going to be very interesting. We're going to try to have Rich Anderson on the horn to be our guest. He's still in Naples. I hope he's back by then, and we'll be able to chat with him because we've made some pretty significant bottoms in the wheat market. We talked about that. Of course, it had a 35-cent move in wheat over the last 2 days, and even beans are starting to perk up, and especially the new crop beans, the beans from that'll be harvested in the fall, contracts for 2015. So we've got some big things happening in commodity markets, and as you know, most of them have been down for quite a while, so there could be a possibilities of some really good rallies here that we might be able to take advantage of. But we'll do that on tomorrow's show, on the commodity show at the same time that we usually broadcast on Thursday. We had a request from one of our listeners about Apple because of the, we had that big gap that occurred a long time ago. Well, it was about whenever I guess it was about a week or so ago, we came down to that $500 level, and we've held that level pretty good. And at that time, I was talking about this, and I mentioned that when it does rally back into that gap, that I believe that Apple would be a sale at that point. And Apple is one of the few stocks that is really strong today, and it should get up to that 526 level, which is the area where it left the gap. So that's another reason to think that we should get a pretty good gap. Apple stopped right at the 61% retracement when we came down, within $1 of that exact number down there at $4.99. I believe the low was $4.95, and now we're rallying up. And we should hit the 526 level very soon. I know earnings are coming out pretty soon, and you hear all kinds of stories about how Carl Icahn is not going to let the stock go down. Folks, don't always believe that stuff, because what they say and what they do are two different things, and we don't want to get ourselves involved in listening too much about what they try to tell us, especially if it comes from a government source, because the government always has another way of spinning the yarn that we hear, whatever it happens to be, as far as news of any kind, whether it's the labor news or whether it's the GDP news or whether it's inflation news. It's always something different happening, and it's actually never different. One of our listeners has asked me a question about the Bradley model. Donald Bradley did this model in 1946. He wrote a small pamphlet, around 45 pages, where he just said that these planets have certain positive and negative effects on the market. However, folks, this is only a probability, and it's 70% at best. Jim Twentyman, myself, and Dr. Ruth Miller, we ran every year of the Bradley from 1875 to the present. We keep it up every year, exactly as Bradley put it out. And we've looked at the statistics. The Bradley dates are very good. The trends over a period of time can be good, but boy, it is far from perfect. Right now it's spot on, and sometimes it'll stay that way for a year or two, but then in other times it'll invert all the time. The dates are still there, and we know that there's something happening, but it's not always as clear as it is right now. So remember that it could change at any time, and that's what we try to alert you to, that this could happen. But it's just a probability. It's never a certainty. The two things we know about this market, or anybody's market, no matter who you are, is you never know whether you're going to be right or wrong on a trade. And the second thing is you never know how much money you're going to make on a trade. You don't know how much the market is going to give you if you do get it right. So remember that you have to do the other thing to protect yourself, and that is to quantify the risk before you put the trade on. Because if you don't quantify the risk, you're telling the market that, look, I'm smarter than you. I don't need to know, what's going to happen because I know what's going to happen. And then you're courting death. Then he who knows not what he risks all, and that's what you don't want to do. Don't ever go for broke, folks, because you'll almost always succeed. That was taught to me by my good friend and mentor, Dave Nelson, way back in the 60s when I was learning to trade soybeans. So keep in mind that it's just a probability that we're looking at. It's certainly not a certainty. All we're looking for is support and resistance on these things and finding a place where we don't have to risk very much in order to see if our position is going to be right or wrong. That's the main thing that we're looking at. So I want that to keep in mind that that's what we're watching. I've had a request to talk about silver and gold, and I'll do that right now. I'll put the silver chart up because it is certainly interesting. We finally had a huge short covering rally today, and that's what it looks like. Tomorrow's figures on the market will tell us that whether we have any new buying or anything coming in to the market or not. But we'll have to wait and see. Today's high was exactly 786 of the high that we made just a few days ago. Last week's high was exactly 786 to the exact point, which was $20.30 per ounce. But for the first time, and I believe that this was related to short covering, you'll see when I put the chart in where I overlay gold over the silver, you'll be able to see that silver actually popped pretty good. The problem is if you'll notice that tail that's up there in silver, up around $20.30 per ounce. Excuse me, I need to take a little swig of vodka here. Oh wait, no, it's water. It was a very fast tail, and I happened to be watching the market that time, and it went from 20.30 back to 20 cents, 30 cents an ounce, which was $1,500 in a heartbeat. In other words, it went up $1,500 and down $1,500. And if you had your order somewhere in there, you probably got a horrible fill. And that's one of the problems that silver has, is that it has about 1/6 of the liquidity that we have with gold, and that's the main thing. But we did go up, and we matched the highs that we made back on the 23rd of January. We did not do that in gold, but remember, there's a lot more selling coming into gold than there is in silver. I'll show you the gold chart here next, because you'll see that there is a big difference between the two, and believe me, this is one of the flight to quality things, so it's important as a trader that we watch, how some of these things are really going along here. And what you're going to be able to do here is you'll be able to see that we really didn't do very much in the gold market today. We had a rally that took us up to the 786 of last week's high is all we really did, and so that's really telling us that there was nothing panicking about this market at all. And as you can see, the silver on the blue line there rallied even a lot less. So this is what we're looking at when we're watching these things unfold. So there's no panic here yet. Gold still looks bullish. I'd really like to see a move down to 1220. That would form a very nice ABCD Gartley, and if we were to get that, I would certainly be looking to be a buyer at that point, because we've had a nice run up over the past 5 weeks, and we're due for a correction here. If the correction comes, we'll see if it's going to come down into the area where we're predicting maybe around the 1220 level in the gold market. We'll cover this more extensively in the commodity show for tomorrow. We'll definitely do that. But I just wanted to let you know there was no panic that that was going on. Well, I've started something Someone's asked for a chart on crude oil, and I will certainly do that. I like everybody to be happy. This is what we call the Happy Trails radio show, and we'll put the daily crude up. And you can see we're still trying to, as soon as everybody can see, I can get it up here. We still have not broken out to the upside here in the crude. We have just went up and matched the highs of the last few days. We couldn't even take out last week's highs as of yet. And so we're still hanging here. If we don't get higher very quickly, we're going to pull back down to that 93.45 level is what it looks like. What it looks like to me. But there's the fact that we've had a lot of volatility in stocks and everything for the next few days. Basically, what that means to me, folks, is there's been a shot across the bow. They're trying to let people know that volatility is coming. The volatility index has told us that. We went from 12 to 20 in a matter of 8 or 9 days, folks. That's a red alert. Now, if we back off some, that's perfect. So we want to check the back off, and if we get that in about 5 days or so, it's going to set up what I think is going to be a really nice trading opportunity where you can get into some of these things and not risk very much. And that's the whole premise of what you're trying to do when you get into these moves, is to get in with as least amount of risk that you possibly can get into. So keep that in mind, that the next few days we're assuming there could be a rally, and we all know how you spell assume. It's ASS, capital U, capital Me. So be sure that remember, we keep that with a grain of salt. It's all probabilities. It's all based on probability. In fact, I had a call from one of my students from 8 or 9 years ago. He trades only the grains, and he had his longest stretch of winners, and he called me because he was concerned, and I said, why is that? He says, well, I'm afraid I'm going to have some losers. And I basically told him, I says, well, why are you even calling me? You know you're going to have losers, but you don't know when it's going to happen. You don't know whether it's going to happen after the 23rd winning day in a row, the 28th winning day in a row. You don't know, and it'll probably be 4 or 5 days in a row that you have losers. But you have to keep trading, because it's all about probabilities. It's all about probabilities and risk control. That's all you can do. You just don't have to, you don't ever expect that you're going to be right all the time. God, if you expect that, you're setting yourself up for a huge failure. I mean, because no one can be right all the time. I mean, that's silly to even think that. But that's what some people, really think about. So we'll wait and see. We'll see if these things will have any type of a bounce anytime soon. I had one other question here about astrology, and that is, what is of all the things I've looked at astrological, what are the best things that I've found? Well, to start off with, I think the Bradley is one of those. Okay, we've got to take a little break here. We've got the Dow still struggling here, and we'll be back in a few minutes. The Dow down.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Okay, folks, we've got a few more minutes here, and I wanted to bring up the chart of the Dow Jones transports. As you can see, we've gone lower than we were on Monday in the Dow Jones transports. We've rallied back, of course, and we're holding our own so far. There's a potential here, as you can see if you get a chance to go into Tiger TV, of a head and shoulders pattern forming. If we can get the market to rally in the next few days, into next week, you would have a head and shoulders pattern forming on this Dow Jones transportation. As you can see, the 3 drive to a top pattern that we had back on January the 24th. The market broke down, very, very badly, from that spot, and that is one of the reasons why we've had, so much of a, correction in some of these things. But the main thing that I wanted to bring to everyone's attention here is, if I can just find it, that's the whole key. I'm looking for it, and trying to get an Italian to walk and chew gum at the same time is a really difficult thing to do. Anyway, the Nikkei has been breaking badly also, and I wanted to, I think this is it. This is it. No, that's not what I wanted. I'm trying to find it. No, this is close enough, I guess. This is the New York Stock Exchange Index that I put in the newsletter last week, showing you the minimum objective that we'd be looking for in the stock market this week, and we've hit that exactly. We hit 97.54 was the exact low so far today in the NYSE index. So if we can hold that level and not go below it, we've got a chance for a rally to go. We've rallied back more than 100 points in the Dow Jones, which is a which is a very good sign. The bonds have not told us that there's any type of a panic coming. They've sold off 2 full points from their high, and that would tell us that we are probably closer, to a bounce here than we might think. So the thing is that you've got to remember, folks, that it is different this time. I really believe that is in fact the truth. It's going to be different, but not different in the way that they think it is. I think it's going to be worse when it finally does roll over from here. This is the shot across the bow. This is the one that says, hey boys, wake up. Things have changed. We got a lot of stocks that have been going down. They're below their 200-day moving averages. I know people look at that quite a bit. They have lower tops, lower bottoms. All these things happen. By the way, if you really have an interest in these patterns that we use here, Steve Rhodes and myself, and Tom O'Brien, of course, Tom and David have put up the timing of the charts, Art of the Charts program, which draws the Gartleys for you. It sends them to you the night before, and you're able to look at the patterns, determine the risk, and you'll be able to do some of these patterns yourself. And I think you would be really remiss if you don't try it. At least try it, because I've looked at it, folks, and it's the best I've seen. And I've seen a whole lot of stuff in my 5 decades of doing this, and this does a really good job of picking the patterns. You've got to do the hard work of putting the buy orders in and putting the stops and stuff in, but it shows you the pattern, and it scans so many of them that enables you to really get down to the nitty-gritty. And a lot of them are ETFs, and I think they're probably going to expand it to other things down the road, because the success of it so far has been far better than they had hoped. So live every day in an attitude of gratitude, and may God bless.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You're watching Tiger TV.